Daily market recap for Thursday, December 16th. Let's go. This is Dan Max at EXP Realty, aka the trading agent, with the daily stock, Bitcoin, gold, and silver market recaps. Please check out the Discord room. Link is in the description. This is Dan Max at EXP Realty, aka the trading agent, with a market recap for Thursday, December 16th. I hope everyone is doing well. I want to start on the Discord room. Interesting, some of the things that I was looking at today, because again, I've been trading for a really long time, and I remember the markets back in the early 2000s, and you'd have like the NASDAQ getting crushed, and you had energy and gold, and you had metals and steel, and all these things rising, and it was because the money was rotating. And it's interesting because I remember this report from like even last year, and it's like the market cap, total market cap of all the companies in metals and mining, 203 billion, basic materials 926, energy 1 trillion, and then there was like the NASDAQ, top 100 names were worth 17 trillion. That was last year, so they got to be worth at least 20 trillion now. And it's just interesting because when you think about it, the market is over leveraged technology, and that's one of the videos I did a couple weeks ago about the tech war that is coming. It's just so much money is leveraged in technology, and not that tech disappeared in the 2000s, it's just the money rotated to what had the bigger upside over time. And when you're going to build out this amazing future in technology, it takes infrastructure, and it takes materials, and it takes investment, and just keep that in mind. I mean, again, this feels very reminiscent of the 2000s, and I know the rates went up from 2003 to 2007, but I don't think the feds are going to do that, but they still need to invest in materials. So we shall see. I mean, in time we'll know for sure. But I hope people checked out the previous videos. I mean, this action has been pretty easy to predict in my mind. It's just timing, being patient. So here's Bitcoin. Let's get into it though, like stocks and Bitcoin and all that stuff. I mean, I said the 47,000 range. To me, this is a big cup and handle. It's basing, around the 50% retrace. I don't have any problems with people snagging some, and we talked about this area in the red. It looks like good buys. I mean, you bought here, you could have bought here, in here, and here. I mean, as long as it holds. I mean, again, money management is the key, and Alan put out a really good thought today. The most important thing a trader can do is follow their trading plan, be it a day trading swing or long-term investment. Respect your sizing, risk, and stops, as well as profit targets. Do research and find methods that make sense and work for you. Protecting your capital is rule number one. Again, everything he said is correct, but rule number one is protecting your capital. So if you're buying here and you're wrong, you have a stop, you can get back in. But at this point, I don't see anything wrong with Bitcoin. So I like the 47,000 range. Let's just jump into all of this and get it going. TLT. Thing that said, we talked about yesterday was that the feds weren't going to let rates rise because you're never going to hit maximum employment. Like, what is maximum full employment? I mean, when you have an aging workforce and technology has taken people's jobs, that's not possible based on their parameters. So I think lower for longer, free money is going to continue. Talked about the TLT needing to hold a 20-day. Today's action it's a little tricky. I mean, I would say I don't know, and then you need more information. I would say it needs to hold this 148 level. It did technically close below the 20-day, but this candle is another hammer. It's tough. It's tough to say. I mean, you opened at the low and you popped, and then you closed nearer the low. So I would use the 148s. And again, the only reason why I really reference the TLT most days is because it can be tradable, but the bond market, as long as it's stable, like you're not seeing big, wild, crazy moves, the stock market's going to hold up. The dollar. Now, this is one that little tricky. Talked about this candle right here being a bullish sign to me because you hit your high, you hit my resistance zone, you made a lower high. I mean, this is even a signal that's potentially dangerous. This with volume, and now 20-day below the channel. I don't like that it's a doji because sometimes you guys know indecision at points of break need to be confirmed with volume and action. This is an indecision candle, so it's not telling you for sure that the dollar is going to break, but levels have been violated. So radar, watch, keep it on the mind. The VIX, this is just 100, 250 day all confluence. We talked about the W earlier. We talked we were going to probably spike at some point. Now I'm telling you right now, just you got to watch these areas, and we could chop a little bit every time you get a big spike in the VIX. I mean, here's a perfect example. In September, you get some reverberations. That's normal. Whatever took the VIX up takes time to work off. So I'm not surprised the markets were down today. I mean, they were up nicely off the lows from the Fed. So just expect a little chop. I mean, if you read my seasonal report, you said from between the 15th and 18th, the market is choppy and will typically bottom. And the 15th and the 18th is a general number based on every year. And it's, the 16th? Chop, chop, chop. Keep it simple. The SPY. This one is interesting because we got right back up over this 472 level. I mean, I don't think it's an M anymore, so we can just remove that. It popped. It dropped and held the 20-day. I mean, again, these are days that the volume's not huge. Just looks like some profit taking. And at this point, I don't know who's in really control, or bulls or bears. I know we're in between old highs, and we're not making, we're not really breaking the secondary trend line and making new lows. So this is where choppy action can be incredibly frustrating for traders who just overtrade, because you're in positions and you don't know what's going to happen day to day. So that's the part of trading. You don't know that day to day. QQQ, I mean, I've noticed this today and was like, man, it opened up, crushed. Now the volume is accelerating a little bit. I would watch the 50-day. I mean, you can tell 50-day holds, then the 200, then it's good. If then not, it's going to the 100-day. I mean, could it fill the gap at 362? Could it all line up so that at some point we get back down into 361? I'm not really that bullish on tech. I don't really like the way it's looking. Tech is different than the SPY, and the SPY is different than the Dow. They're all a little different. IWM, the same thing. I think there's a lot of hot money. I mean, there's a lot of money in tech that will probably bleed out in time. I don't want to get into the rant of it, but you just have to understand, money flows. It doesn't always go in one direction. And as much as everyone thinks tech is the future, tech is always the future. It's just how it reacts in different parts of the cycle, in different years, different circumstances. So just don't get your head wrapped around that it only goes up forever. It can significantly underperform if you study the 2000s and just certain periods of the market action, seasonality, whatever you want to call it. This is why I took the day off today, because I bought metals and there was nothing to do. I mean, why would I stick around and watch it? Said 165 area would be a good entry. I got in there and got in some on the back test. I honestly started buying some back up in here. So I mean, today was just to get back to even and make some money on these trades, get back to even on these trades. I like the metals. I mean, if you watch my video on seasonality, you know exactly what the hell is going on. And again, I posted, I was the last time I was going to post this on Twitter. I'm like, I am amazed that 99.9% of FinTwit doesn't pay attention to the gold seasonality, doesn't pay attention to the bottoming potential from the FOMC meeting in December for metals, tax loss selling peak usually in the middle of December, and then just in general, what was going on in the markets, quad OPEX. Quad OPEX affects a lot of things, so it's going to create some volatility. And when gold got down there yesterday, you're going to see it in the next few names. They were all screaming buys, so I didn't need to sit around and watch it. The action told me I was right. So, again, if you learn and study the markets, you trust the action. And when you know something, and when you don't know something, you don't know something. Silver, double bottom. Man, this was just such a gift. We were all laughing about this in the Discord room. Sorry, my congestion. Looks great. I mean, made a higher high, nice little pro gap off the low. If you don't know what a professional gap is, man, I probably need to do a video on that one, because that is another topic. What are professional versus retail gaps, and professional gaps versus retail gaps? There's a big difference. But this is a professional gap off the lows. In a professional gap, what you'll have, and so that was a retail gap. This is a professional gap, and usually professional gaps happen near the lows or a trend change. You see, right here, retail gap, professional gap, retail gap. Again, silver has a lot of gaps. Maybe we should do a SPY. Let me just, since I said it, I feel like I need to talk about it for a second. Here you go. Here's a nice little professional gap. You get a nice retest of like the low area, gap, and run away. Gap at the high ended up being, some of these are, again, you have to look at the volume and the specifications on them, but retail's like selling. Pops back up, boom. Now that's what you would consider that professional, because you are breaking levels coming off of highs and lows. Retail gap. And again, like I said, I'll have to do a whole video, because I'm watching it, I'm confusing myself just looking at it, because you have to usually professional gaps, like I said, they start the trend of something, and that's where you have to, you can be the probabilities. It's not like, hey, like that gap was 100% a professional gap and we're going higher. No, it's like you're looking at silver, you're going, all right, this has been down, all these gaps. Now you had volume stipulated a bottom and you gapped up. Volume stipulated bottom should gap up. Like, you see gaps at bottoms and tops that usually lead to bigger problems. After a nice run up, that big gap, now goodbye. Retail is buying, and it just ends up going lower. You can see the difference, meaning that retail is like the retail gaps are the ones that are traps. Professional gaps are the ones that are continuation patterns. That's kind of how I look at them, and everyone has their different versions of how they want to describe it. But I hope that helped. Professional gap, the market's going to continue. Retail gap, it's usually a trend changer. Oh, GDX, you double bottom son of a what. Look at that action. Wipe out, long wick, nice close. That is bullish. Again, I don't even need to watch this. Yesterday's action said what I needed to see, because you retested the lows. And anytime you can retest and form these long wick candles that look like, wow, they could have crushed this market, and then it closed up near the highs. Like, that action is indecision, but also confirmation that there was buyers down here, because you'll see it if you zoom in intraday. GDXJ, same thing, close near the highs, 10 cents off the highs. Here you go, look at the volume. You retest the low areas, this big green bar open at the lows, close at the highs, breaking over the 8 and 10 day. Looks strong. The volume here, let me just put these arrows, because this is the kind of stuff that you look for when you see a double bottom. Like, you want to see this retest, you want to see the shakeout, and then you want to see this action. That confirms that it should bounce. Now, again, when I say should, there's no certainty, but you are playing probabilities. Do you want to buy up here, or does this look better to you? You know what I mean? If you have stops, and we talked about stops, if you would have gotten in, now the action, you can confirm and get back in. And if you're managing your losses and you're managing your capital, that's how you trade. You don't trade certainty, you're trading probabilities. AG, double bottom, we talked about this yesterday. I was buying at 10. I was like, I don't even care what at this price, it's just where it's come from, what's going on with them. This is just a gift. $10. Got lucky that it didn't blow out lower. Anything's possible intraday, and I like the action. You got back over the old lows at 10.50. We're holding. Keep in mind, 9.75 to almost 11. That's almost a 10% move in 2 days. If you caught the lows, there's profit taking. That's part of the market. It doesn't always go up every day and every hour, every minute. Talk about that a lot with people. They just don't seem to wrap their head around it. KL, we talked about this being a little W. I like when KL leads, and KL was acting really good yesterday, because that had a doji. It didn't even make a new low. As you notice, some of the silver and gold and miners names made new lows or retested them and closed, okay. But this, to me, closed really well, because you tested it, there was buyers, and you closed higher. Now the volume, I wish it was like this, coming off the bottom, but so far so good. Sometimes you don't always get the volume you want, because this is what's hard about volume. Sometimes when you're not sure, you have to zoom out. And here's another thing that's worth mentioning. The longer something chops, you should expect less volume on each drop, because there's only so many hands that can be shaken out. And I hope that makes sense. Think of this as you're trying to get people to sell something, and it retests a certain price, and you tell them the lowest price it's going to, say you're scaring someone out of something, as I like to describe it. Think of it this way. You can only scare them so many times. The first time you scare them, they should sell more. The second time, they're not going to sell as much. The third time, they're probably like, what is this, and who cares? Well, that's the thing. When you chop the multiple bottoms, if you don't break new lows, you will not shake out hands. So just keep that in mind. Again, this is where volume, studying it, understanding circumstances, and putting it, applicating it for 20 years will help you really understand what's going on. And experience, it really matters. PAAS, we talked about this like level down in the 21s. That action yesterday wasn't great, but boom, big gap right back up into this range. Expect some chop here, but that, man, a professional gap again, coming off the lows, confusing everybody. Retail selling, short and all in short, changes direction. That change in direction has to be a red flag to you that if you were selling the stock, you were wrong. Because if this is the stock 22 and if it's short and it should be going lower, it should never reverberate like that on you, especially when it makes the new lows. Like it should have closed and continued lower. That action today says no, you're wrong, get out. And probably that's why the volume picked up. Shorts, buyers popped in. X, we've said this, what's going on? Wait for the trend break. We didn't close above it, but I think you could start layering in. Just keep in mind that layering, like if it gets back to 22, maybe you add, or if you're all in, have your stop at 22. I mean, again, there's many ways to play trading. Like there's not one style. Like I can't tell you what to do and always be right. It has to fit how you trade, what you like to do, and what things matter to you. It looks good. I mean, if it can get back over it, I mean, again, you don't have to be surprised. You got all these moving averages sitting there above waiting. Of course, it might chop a little bit. VALE, been praying to get a pullback. You didn't get any. And in this market, again, if something is acting strong in this shitty market, excuse my French, YouTube, it's telling you it's strong. Just keep that in mind. I hope people are paying attention. I know there's a lot of people who are starting to wake up and go, dang, that was a good trade. We should buy that. AMD. Talked about, could have bought it yesterday. 20-day was going to be a problem. Well, the 20-day was a problem. It's there in red, very obvious. You know, as I said, the easy money's been made. You saw a monster move, 60% plus. Now it's got to back off and chop and fill out. 20-day is now resistance. I mean, I hate to say this. Just don't even trade it for a while. Watch it. Wait for extremes. Like, that's a nice down move that should pop. Now it should chop out and maybe make a lower low. And people are going, oh, you're doing what you're talking about. Fine, whatever. Just watch what happens. Apple. Okay, so here's where it gets interesting. So we talked about the breakout of this green downtrend as a buy. This red one would probably be resistance. It went higher. And then we figured out, then I did a little more work and was like, oh, no wonder the monthly up here. I hope that's the target. But beware. Now, so this is another hard topic for a lot of people who don't trade or have the experience. When you break out of a trend like this, you want to see it continue. You don't want to come back and back test it. So now it gets real binary again. You can short it below today's low, or if it holds, you can buy it and expect it to go higher. So that's actually a good thing if you like to know that you're going to be right away, and it keeps it simple. Because again, if it does hold, what should do? It should go higher. If it doesn't, it should fold. The only thing that's interesting about gold or not gold, Apple here, is the volume. The volume at the highs. All this red, these red days. Oh gosh. Anyway, these red days. Let's zoom in. Pretty solid distribution. Like, that's above average volume. If you say the average volume is somewhere around 85 million shares, I mean, you're doing double that. It looks like it's due to fall. I could be wrong, but this action, if you're a bull, you are hyper sensitive and aware that you could see a blowout, and it just needs to hold. That's all you really need to know. I know that seems very vague, but you have to let the price action tell you what's going to happen next. And sometimes price action can be not a strong case to make for trading, but look at what's going on here. Just be aware. There's a lot going on here. It needs to base out to go higher, or it's going to get slammed and drop. But the problem is, this is where we roll into some of these other stocks, that tech names that I like. They don't look that good. MicroStrategy, I mean, it needs to hold this area, 560s. Keep it dead serious. Like, that's all it needs to do. And if you're buying it, put a stop in. If it's not, it's gone. RIVN, this is another one. We said, wait for the wedge to break. I mean, we got down to 107 today. I mean, you could have bought it. You can layer in. That's all I would say. Just have a stop. I mean, I think it could pop here. Roblox, we've talked about this one. The 50-day, I like it. Retesting, say, I wouldn't say those highs because they're holding, bouncing there. I would say this zone here to me is a little more appealing. The 90 to 87. because if not, it could fill the gap at 79. I mean, you see this like crazy up and crazy down. This stock moves, so just keep it in mind. If you, whatever you do not be an all or nothing trading. Do not go big right at the first low, because it probably isn't. It needs to base out. Tesla, I've been trying to warn people, like up here, double doji, it's 2 times range. I reversed my fibs because I consider the completed move. You went from 560 up to 1246. That's a big move. It needs to digest. Now it's digestion. It's digesting in this flag. If it breaks down below this, I'd watch this whole little area, because Tesla doesn't, you're not going to nail the exact prices, but I'd be watching this area, because if it fails here, maybe you get back into this channel, and maybe the 618 is coming in 9/800. I mean, again, patience. The big money's been made. Now you have to wait, and if you own it 100%, I'm sorry, but if you're owning partially and you want to buy down here and you want to trade it, you've been watching it so long, you know what to do. Great. Not, just leave it alone. PENN, this one's frustrating me. I mean, you saw the volume today, but the action wasn't great. I've got some calls that look like they're just going to die. 20 days the key. Just get back over the 20-day. I mean, it looks cheap down here because compared to where it's been. Wrong is wrong. And you can see why, initially why I thought it might be a good buy. Because this has been the buy zone, but we're not holding it. But keep in mind, it went from 140 back into the 40s. It feels like it's due for a short squeeze. It's not gonna happen unless it happens, that kind of thing. And it's like, just wait. You can buy and put stops in, but that's all you can do. Here's an interesting EXPI. I keep telling people I like my company's stock. I think down here in the 33s looks good. I don't think there's you're not gonna go wrong with buying it and having a tight stop, because it is coming into the seasonally strongest part of the year for real estate, and that is the spring to summer buying season. It typically runs up. I mean, the COVID year, 2021, look what it did. From December, popped, went absolutely gangbangers. I don't think this thing has been around that long. No, the history of it, well, I guess 2020 is different, obviously, with COVID. But anyway, real estate typically pops into the spring. I think everyone knows that. I don't think, hopefully that's not new news. XOP, this is one that we talked about that was just the 20-day. 20 days now your friend or your enemy, depending on how you're looking at it. I would wait for this area back in the 92 to 200-day moving average range test. And then let's head on to ExxonMobil. I apologize, it's a long one, but there's a lot of stuff that happened today. And usually when the market goes one way on Fed Day and then the other way on the next Fed Day, be aware that maybe yesterday was the trap. Maybe the market is about to get crashed. Maybe get crushed. All right, it's time to move my trend line on ExxonMobil. It's clear that it's not that important. 20-day matters. I would say at this point, I apologize. I have terrible drawing skills. I would say something like this. You need to close over that. I think it's going to come right back down to the 100, 200-day. Keep it simple. All right, well, I hope this helps. Again, check out the Discord board. Tons of people asking questions, information to share. Please like, share, and subscribe. I guarantee if you're following people on FinTwit that are just giving you advice but not really explaining it, then you're just listening to like comedy or really good drama or really good content but with no context, so it's hard to trade it. So I love a lot of the people on there, but I just don't think many people have experience of what's going on. So hope this helps, and I will talk to all of you soon. Have a good night. For more trading knowledge and insight, click on the video links to the right. I appreciate you stopping by. Please subscribe, like, and share with your friends. And if you haven't joined the Discord room, check the link in the description below.